evening, Theo Trade. This is Coy Rosebloom, and you're watching the Theo Nightly video for April 9th, 2019. And we're talking compressed stocks in the S&P 100, getting ready for a future breakout opportunity. We'll start our analysis with low ADX stocks. We can do this with our watch list. You can go beyond this, S&P 500, NASDAQ stocks, or your own watch list. The way to get our ADX indicator, which is right here, is to put on a customized sprocket, put into the symbol list in the description, etc., the ADX. It's going to be here. Double click, make sure it's on a daily chart. We look at 14 days back, and that's going to give us our scan criterion. I like this a little bit better than the scan tab up here because it allows you to search and filter stocks a little bit quicker, and of course pull them over immediately into the chat window. And we'll start our analysis with General Dynamics. Now here's the logic behind compressed stocks. When the ADX is our average directional index, when it gets under about 15, that suggests the market is compressed, consolidated, low to high, high to low, forming a triangle, forming a rectangle, some type of compression pattern. And the future, if the volatility idea is correct, which is low volatility leads to high volatility leads to low volatility, that gives us breakout opportunities, in-out spread opportunities, and of course, any type of premium purchase for breakout opportunities. And again, the last time we had a very low ADX in General Dynamics was over here in August of 2018. And that was when the market was roughly 200 per share and then fell quickly towards about 145. So that's what we're looking to do, is any type of future breakout given range compression right now. So simply draw in our trend lines. This is where the probability of expiring cone, the indicator of the tool strategy, does come into play. Also just price levels themselves. So I like to take the price as it is now, look for prior highs, that would be a key inflection high, or prior lows, or just round numbers like 150, and that gives us a sense for potentially how far the price can go. Our probability of expiring cone tells us maybe how far it takes or when in the future the price could get to that level. This would be roughly June or late May, really probably June of 2019. And that opens up a whole world of option strategies to us. Again, we are not looking for a directional play, but for a range expansion event. So if this or some of the other stocks we'll talk about in tonight's video do get range breakouts, it probably leads to an extended move or a directional swing toward, in this case, about 185 or down to about 150. And again, we simply look at our probability of expiring cone, any type of things with implied volatility, average directional index, which it itself is very low, and of course our scan is based on the ADX, average directional index. The next stock is Walmart. Now, Walmart might not be your first stock to trade or think about. It's not going to be that volatile, but still, it itself has low ADX components or periods that lead to future range expansion. So the last time we had a very low ADX on Walmart was June, July of 2018. That was at 84 per share, and the outcome, many, many months in the future, was a move to about 186. And then, of course, down again. And we have established a trading range between about 100 per share and 94. The most recent activity, where we've had this plunge off in the ADX, plunge off in the average true range, but a little bit of a pickup in implied volatility, has been between 97 and 99. So let Walmart break through 100 per share. It's going to take an implied volatility pathway or range expansion pathway higher, 104, 106, or if it starts to break 97, that's probably going to lead to a quick sell swing to 94. And beneath that opens up even further pathways, but we're not there yet. AIG, the last successful trade we had in this or discussion off it was this bullish support bounce, this rally up away from the 40 per share level, which again is a pivot point. That was an indication. I drew this arrow just showing the pathway that is probable, and that's what happened all the way to the midpoint and then back to the prior high. This is how low ADX stocks behave. They trade sideways, they go high to low, low to high, and we can trade short-term intraday plays from these areas to these areas, or of course take a broader perspective on it, which is the purpose of tonight's video, with in-out spreads or any other type of option, verticals, or hedge type strategies. Now, the last time we had, just referencing for the educational purposes here, a low ADX situation in AIG Financial Company was again August into October. We both had a rectangle and then a triangle, and that shot the market down from 55 per share all the way to about 35. That's a big move for a large financial company in the S&P 100. From there, we have had consolidation. We can even draw another little triangle, and anything above 46 opens a bullish surge pathway. Probably, I know we're thinking bear action, and that bear action takes us bearishly or with short sell positions from 44.50 down to about $40 per share. That's your probable price pathway in the future. And of course, the breakout pathway would be to the upside. No prediction, just getting ready for a range expansion or breakout event. Wells Fargo is another financial company. It's helpful to note maybe that some of our top candidates in a low ADX scan are financial companies. Nevertheless, we'll update our charts with Wells Fargo, and that's going to take it to about 48 per share and about 50 per share. Low ADX, low average true range, and a little bit of a pickup in implied volatility. So that's getting ready for a potential move. I think it's going to go to the downside. If that's the case, trail that toward 44 per share. Otherwise, this is a support bounce range play until we get that breakout off of 48 per share. And that can be done on the intraday levels on a departure from 48 per share. Berkshire Hathaway, probably not a stock we're going to be actively trading, but still is in a declining rectangle pattern. The next play for it probably is down to this 198 per share level, or if it gets above 207, 208, that enters an open air zone. Similar, of course, not surprising, to middle of 2018, with a low ADX, low average true range, set in motion a quite impressive, actually, bullish rally. And we'll finish with Schlumberger, because it's appeared on our intraday trending stock list a little bit recently with a couple of trend days or bullish sessions. But that's occurring within this very tight coil, or this very tight rectangle, at about 41.50 per share and 46 per share. That puts the midpoint about 43.75. And we don't have a big cone of expiration or probability of expiring cone because the implied volatility is low. That's an advantage of this type of strategy, because at the moment we have low ADX, low average true range, low implied volatility, and the future, especially on a downside break or a put position purchase, would lead to expanded implied volatility, and this cone is going to expand. So will the option prices of all options. That's on a downside swing. If the market breaks higher, that's just going to be an expansion of the cone to the upside. Nonetheless, bullish if above 47 per share, but at the moment, we do have Schlumberger in a trading range into resistance and possibly coming down off of that at least for the next couple of weeks. We'll see how these things play out. We'll, of course, take positions if you're interested in playing range contraction at the moment, which leads to future range expansion. If anything, we know how to set this watch list up following these names and maybe others or other watch list of your own choosing for future breakout opportunities. As always, be safe. This is Cory Rosenblum with your Theo Nightly video for April 9th, 2019.